So in today's video, I'm going to do the preview or the review of last week from Monday, the trades which I took on SPX 500. So without wasting time, let's get started. Hey guys, welcome back to my YouTube channel. So this was the thing which I taught you in my last video, that you have to look for the candle's body, okay? And you have to take trades at this blue shaded area. At this time, you can look for your entry, and it's like that silver bullet, ICT silver bullet, okay? But the thing is that ICT says that you have to start trading from 10 to 11, right? But for me, I was doing back testing, and I get to know that after 11 o'clock, most of the times the pair moves, okay? After 11 o'clock, every time it moves a lot. So I try to take trade from 10:30 till 11:30, okay? Or yeah, from 10:30 to 11:30, because see, this is a chopped up situation over here. So, and I caught it live also, like what was the day? This trade, and I will discuss this one also. I caught this live, and I will put the recording of this trade in the end of this video. But the thing which I'm trying to say is that when you're trading on SPX, and if you don't want to look for bias, or like, because sometimes your bias can be wrong, okay? But the thing is that you should know your bias. That's a good thing, okay? And another thing is that you have to look for the ranges at 1H time frame, okay? So okay, this is a Monday, okay? And now you guys can see that it was forming it just tapped into the equilibrium, the 50% of the Fibonacci. So we know that at 1H time frame it can probably go what? Bullish, okay? So what we will do over here, we will go into smaller time frames, like from 1H to 5 minutes, and now we can see this right over here. So at London session it went up, but after that, when the ICT silver bullet starts, this is how you have to mark your charts, okay? So we can see this original move, we started from here. So first we will mark our dealing range like this, okay? Now you make money when price leaves the consolidation, right? When markets are trending, then only you can make money. But the thing is, in this one, we can see that most of the people, what they will do is they will mark this as a swing, the structural high, and this will be the structural low. No, it's not like that, okay? The thing which I'm trying to say is that whenever price goes up, okay, if price leaves small down close candles, those candles are formed by algorithms, okay? So that the price should not go below that, not this one, like this swing, you can see that it's clear swing, right? Swing low, that short term high, that short term low in the left of it, and short term low in the right of it. So this is a swing low. So now what you have to do is, or you can do it like this only, just don't go into deep into this. Like, you have to open 1 minute time frame to go deep into this candle and this candle. What you can do is you can only be on 5 minute time frame and try to take trades, okay? So over here we can see that this was a swing low, and what price did it? It took that low, right? So for a person who doesn't knows the higher time frame narrative of 1H time frame, like we know at 1H time frame it's touching what? Equilibrium, right? So now price can go up from there. So now we can see over here that price has gone below this. Now what is the what you call the algorithmic order block? So where is that? This one, right? So when market was going down, this candle closed above, right? So this was a green candle. And so what will happen is, in market went down, so now this is our swing high, okay? So now I just wait for the swing high to be broken, and with this candle at 11:20 it broke this swing high, right? So now what I did was I just took the entry on this candle's high like this, and my stop loss was just below this over here, okay? And after that, price kept on running. The thing which I'm trying to say, that you have to look deep into the chart, so you have to keep your full focus at this moment. And in afternoon session I took a loss also over here, like I took a buy over here. I was thinking that it will go till this 443 4350, it will go till over here. But the thing is, I took a buy over here when the 3 p.m. candle at this one, I took a buy, but the thing is, it went down and it was my loss. So morning one was like big profit, like 1:4, but in afternoon I got another loss. So the thing which I'm trying to say, first thing, you have to look for the narrative, high time frame narrative. Like, have you guys ever imagined? So for example, with a simplest strategy, so for example, that you just marked you just marked a higher time frame supply or demand, okay? You just marked it, supply and demand on higher time frame, and you can see that from that supply or demand, like in a retail perspective, from the supply and demand, the price gets a rejection, okay? So if you get a rejection from that, for example, supply or demand, something like that, if you get the rejection from here, it will go back up because it's a small rejection. But the thing is, if you're looking at the rejection on 4H time frame or 1H time frame, then you can just take a trade and you can make money, okay? Because we know that from that 4H level or 4H PDRA, from there the market will reject and it will give some fluctuations. So fluctuation on 4H time frame can be a lots of move on 5 minute time frame, okay? So you have to understand this. So now we can see that it has broken the high, and here was my buy. And another thing on this day, so on next day we were also bullish over here, but we got no entry. The price went up. Like, for example, you could have got entry on 1 minute time frame. Lots of people do, but 5 minute is a little bit clear, and it's not that much what you call the distraction. So over here price left this opening range, which is from 9 to 10. No, not the opening range, the dealing range, which starts from 9 to 10 over here. Okay, this one. And if I would have got an entry over here on this, but the silver bullet, my silver bullet starts from here. So what happened over here, you can see, look at over here closely. Market gave a down close candle, and then this candle over here broke the high of this candle's body. Am I correct? Not the wicks. Don't count the wicks. Only look for the body, because body is the real price. So it break over here, and I placed my limit over here, and my stop loss was below this. Okay, but what happened? Price didn't tap over here, and then it kept on going up. And afterward, in afternoon session, it was all about consolidation. Okay, so this was the Tuesday. I missed on Tuesday. Okay, with this thing, and now let's go on Wednesday. Right over here in morning session over here, I got a lot. Like I was not able to take any trade because it was in a dealing range only. So if you look at closely from here, this was a dealing range high, and this was a dealing range low. See, where was the price? It gave a rejection from here, but the thing is that it didn't give a clean market structure shift. If the body of this candle would have been closed below this line, then I would have been taken a sell over here. But the thing which happened, like it didn't close below this, and it went up and it kept on doing its own thing. So I waited for like 1 or 2 hours at 1 o'clock at 1:30. Okay, at 2 p.m. the PM session starts. So over here I can see that market was going this higher high, higher low, and now when price broke this one over here, so now this is the higher high, right? Not this wick. You can take the wick also, but the most important thing in this is that candle bodies, how the bodies are closing of the candle, because lots of people make mistake to find out a good market structure shift, or they just cannot find out. They look at the wicks and they get onto wrong ones. But this is how the right way to find the market structure shift. Only look for the candle bodies. Okay, so when I saw that this candle broke this candle's high over here, so now this is my what, low, higher low, right? Because now price will make higher high, and this candle, and my entry was right over here at this, and my stop loss was below this. So now you guys can, and I took this trade and I caught it live also. I was recording it, and I will put the recording of this trade in the end of this video. The thing is, which I'm trying to say over here, is that you can easily see over here that it's forming a breaker pattern also. Okay, so for me, I should mark the breaker right over here. Look how precisely it came and touches this candle's high over here. Look, see, it just taps over here. So it's a classic ICT breaker over here, and you can use this one to get into your trades. And another thing is, you should have a higher time frame narrative. And in afternoon session over here, I placed another trade, and I had also that thing also I recorded in that same video. So now price is going up, and it gave a candle. It gave a candle which closed below, right? Which closed red. So now after that, when this candle broke this candle's high over here, so now this is my what, higher low. And now if price want to go up, it should not break this low. Okay, so when market went above this, I placed another buy over here, and I recorded this. I will just put it, and you will see the executions how I did it. I placed another buy, and it was also into a profit. So the thing which I'm trying to say, that on SPX or any indices or any pair, you have to look for the dealing range, higher time frame narrative, and this type of good. This thing is important, way much important. If you cannot read the market structure shift, or you cannot read the continuation of the trend, then you will end up losing money. Okay, and if you have a risk management on top of this, it will be a good one. Okay. And like, see over here also, now see, every trader was trying to do something in this. Every ICT trader also, like all the guys also who are trading SMC, like they were just looking over here, and they were trying to make something at 1 minute time frame for a sell or buy or sell. What happened over here? Like, what happened over here? Everybody got stopped out, everybody loses their account, and everything has happened over here. Okay, so now how I get to know that the price is in dealing range? This is the high, and right over here. So see, this is our dealing range. Where's the price? Inside the dealing range. So what does it mean? No trading on that day. You can go into afternoon session, okay, but afternoon session was like, it was like a Fed news or something like that. But people will lose their money in this thing, and if you can avoid this type of days from your trading, you will end up being profitable, because you are making profit on Wednesday, Monday, Tuesday. But at this type of market condition, it will take all of your profits if you don't have emotional control and all of that. Okay, and this was the Friday's trade. Look how clearly it gave a breaker pattern over here. Okay, this was my dealing range. Okay, so don't think that this is an order block type of thing. This was my dealing range. So price gave a good market structure shift, and it went up and bumps into what, this breaker. And look how much it is, like how much clear it is that it went up and just closed a little bit body above this line and then just comes down. But I was waiting for another market structure shift, because I wait for 2 times confirmation, because I know that we never know, price can go up and do all of its consolidation till this fair value gap and all of that thing. So when I saw this candle which closed below this candle's body, I took a sell right over here, and my stop loss was above this. Okay, and my target was what, today's low over here. Okay, so this was my target, and I took this trade, and I posted this trade on live on my Discord also. And this one was a losing trade, and I posted on Instagram. So it was like going nowhere. It was like too much of consolidation, and in the end it goes and takes a stop loss. So the thing which I'm trying to say, this listen carefully, that this will be your approach for this trading. Your approach will be, you will look for the narrative on 1H time frame, that what's happening on 1H time frame. Okay, if on 1H time frame you can see, like right over here, it's a 1H time frame. I marked the low of that 1H time frame candle, this structural low, and I marked this high. I didn't mark this wick right over here. I just marked the bodies, right? And look it over here closely. How the candle bodies, the wicks are going down, but the candle bodies are closing below this candle body's low. Think about that. So it goes up, and now if this candle's body would have closed above this candle's body, for example, if there was something candle like this, okay, think that this is a candle, okay? If body would have closed above here, okay, then I would have not taken any sell trade. I would have gone for the buys. But I see that when markets start falling from here, then I know that on 1H time frame it's bearish, okay? And any time frame, just look for the candle bodies, that how it's going. It's making higher highs and higher lows. It's going into premium or into discount, okay? So from here it went to the premium. All the traders, okay, when it was falling down over here, so the stop losses which were above here, okay, all the like overnight position holders, like those guys, their stop loss was over here, okay? So they waited for the market open or London open, and when they see these two candles, right, like this, what they will do, they will just put their trailing stop losses above this, right? And then what market did, it took all the liquidity above from here, and then it went down, okay? And you have to make, so the first point, you have to make higher time frame narrative that it's bullish or bearish, and then you have to go into 5-minute time frame, okay? Or you can go on 15-minute time frame. It depends on you, that what type of trader you are. You can do swing trading with this also, and you can do any trading, okay? And it works on BTC and everything. So you will go into 5-minute time frame. You know that this was that 1H level and price is about to go bearish. And when you see this type of 2 times confirmation from breaker and then another market structure shift right over here, it's a good way to enter over here, right? It was a good one, a good entry right over here. So you have to build the narrative of higher time frame. You have to look for the market structure shifts on smaller time frame, 5-minute time frame. You have to look for the candle bodies, and then you have to look for an entry pattern, which you can say like the ICT on the breaker, fair value gap entry, or from order block. Okay, you can get the entry from here, but most of the time breaker happens. Okay, so now you can get to know about this, and it goes down from here. And this is like a scalping because it's on 5-minute. But I do this on Forex also. So like this was the this was the gold trade right over here. Okay. So on 1H time frame over here, and I caught this whole move, like I caught till over here, like my trade went, I targeted only for 1:5, okay? But the thing is, the trade went 1:18, and I posted this on Discord also before it happened. But the thing is, you can clearly look at over here. Price went down, okay? And now another day starts, and what I told you, higher time frame narrative. So we can see this high and this low, like this. Price is just reflecting from this around psychological bank level, or it's at that 50% of this whole range. So now we know that on 4H time frame we are bullish, okay? And our target was this, or it can be this imbalance or this bank level, whatever you can call it. But our bias is very bullish on 4H and 1H. We also want to see a market structure shift on 1H, okay? So now how you will look over here. So see, 4H is bullish, okay? And now when I saw that price is going over here and it closes above this candle's body, my buy was correct right over here, and my stop loss was below this breaker. So I should mark this. Okay, my stop loss was below this breaker and my entry was at this candle, this line. Okay, and then price went off and it kept on going up. But the thing which I'm trying to say, that everybody in this market was trying to sell it over here. Okay, because it's what's this, like this is a supply zone, right, for every retail trader. So everybody was looking for sells over here, and most of the SMC traders also, they were also looking for sells from here. Okay, they are trying to look for sells from here, and they also get stopped out. Why? Because you have to look for the high time frame narrative. Okay, if high time frame order flow is bullish, and no matter what on 1H 15-minute it's showing bearish, it's never going to go down, because the high time frame has lots of liquidity as compared to smaller time frames. Okay, so that's why when I took a buy over here and lots of people took a sell over here, and what happened? What the market did? It just kept on going up. Okay, so if you want to trade Forex, this is how I trade Forex. Okay, so in my Forex I will just go on 4H time frame. I will do my higher high low analysis, that it's rejecting from a round psychological level, or it's rejecting from a fair value gap or a breaker, and then I will go on 1H time frame, and then I will try to look for another market structure shift, okay, on this 1H time frame. So when I get another market structure shift on 1H time frame, then I will take a buy, and then I will just hold that trade. So the thing is that you have to build a narrative, and if you want a very low or small stop loss, you can go on 1-minute time frame, and you can do like that. That's too much, like you will be confused. So this is the clear thing. Look for the bias. Don't go on daily time frame, okay, because it's hard to predict only one candle. Okay, daily time frame is like you are predicting one daily candle, that's it. Okay, but if you're going on 4H, and you will be able to see that it's going up, okay, at like 1H it's going below to tap this 50%, and then it's going up to give a market structure shift, then you can enter easily over here. Okay, so build a narrative. Every time build a narrative on Forex. Okay, build a narrative and look at the candle bodies for market structure shift. Don't wait for this. If I would have waited, like see, if I would have not taken a buy over here, because why? Because people will be thinking that this is a structural high, this should be broken, then I will take buy, right? But the body has already shown you that the market structure shift has happened. Okay, and now it's your fault that you are waiting for like that price to go above this line, above this wick, and another retest, and then it will. No, it's not like that. Okay, it's a breaker, and you can see like if I would have marked this as my structural high, then price didn't never came back to this line to give a retrace and to go up, test this breaker. Okay, but the thing is, when body is closed above this candle's body, it's a market structure shift. All right, and then another was a GBP JPY. Now look at over here closely. Market was going up from here. I should mark from here. Let's mark from here. Going up. Don't count the bodies. Count the wick. Higher high, higher low, higher high. Okay, now this is the higher low, not this one. Okay, this is the higher low. Okay, now we want to see a market that candle's body should close below this candle's body. What happened over here? Price gave a clear, in this candle it went down, and then now look for a fair value gap. Okay, and now you will get a good fair value gap over here after the market structure shift, and you can enter over here. And where's the all stop losses of the buyers, those who are buying from down here? The trailing stop losses, right? The last trailing stop loss will be this one. Okay, then what market did? It went down to take these stop losses. The thing is that you have to look for on Forex, you have to build your narrative of 4H time frame. Okay, that 4H time frame is bullish. What's the order flow on 4H time frame? And then you have to come again execute at 1H time frame in Forex. But in indices, it's different. You have to only look at the 1H time frame to know overall that where market is about to go. Okay, and then you can go on 5-minute time frame to get entries in the silver bullet. So this what it is that I do, and this is what my strategy is, because lots of people say that they struggle to find a good market structure shift. Okay, they struggle because they wait for a wick to like go and do all of its thing. But the thing is that wicks are not counted. Wicks are only damage. Okay, and the candle bodies are the only price. So they wait for the market structure shift from a wick. Okay, don't wait for the wick. Wait for the body. If the bodies are closed below this this candle's body over here, if it closes below this, you can take a sell over here. So this is how you have to read, and you can trade every day with this thing. Okay, no matter what's the time frame, you can trade it on 1 minute also, and you can trade it on anything. And another thing I can show you. Look it over here. Can you see something in this? Anything? It's a 1 minute time frame. Price went up, took this high, candle's body and this high. It came down, and then it went down, closes below this candle's body over here, and then it gave a retest, and then it went down. What's this? It's a breaker pattern, right? You can see that it went up and down both of the sides, and now it's a breaker pattern. You can enter from here easily. Okay, and this is what I did on my that thing. So the thing is, look for only candle bodies, build your narrative. Okay, and don't go for opposite liquidity. So for example, if on 4H time frame market is going up, okay, and you are looking to take a sell from buy side liquidity. All right, you know that previous day's high has a buy side liquidity, so you're trying to take a sell from there, but the order flow is bullish. No matter how many stop losses or what are those things over there, it doesn't matter. It will go with the high time frame analysis. So this is what lots of people do mistake. Like they think that okay, it has taken the high, now I should take a sell over here, because if you are not in the correct order flow, that where's the market going, so you will be wrong. And I took some losses also. It's not like I took profit. I took some losses on the GBP CAD. Yes, look at over here. I was trying to buy at this candle's body right over here because there was a fair value gap, and I know that people are selling from here. They're looking at it as a supply zone. So I was trying to buy from here, and this is what happened, and it took my stop loss. So now so after this candle, you can easily see that what's going on over here. It's a clear market structure shift, right? It closes below this candle's body, right? And now it goes up till what? Around psychological level, right over here. It just goes and taps over there, and then it falls down. Okay. And now on euro, what's the euro CHF? Like, look at over here. This candle's body closed below this candle's body. Okay, so now this is a market structure shift. Now what people will do is like they will look for that it was going up, and now it closes above this thing over here. Okay, and our bias is bearish because it was falling from here. So now we have to look for sell. Now price went up from here, and then it was going down. Don't buy on this fair value gap. People buy on this fair value gap, and then they say that it's not working for them. Okay. Don't do that. Like if you buy from this fair value gap, you are going to face a loss. To take a buy, I want to see the price goes and closes above this candle's body, not above this wick. Okay, the overall trend is bearish, and if you're going against to make 1 or 2 candles, it will be a loss. So I waited for this candle to close over here below this, and my entry was at this candle's low right over here, and my stop loss will be above this structural high. But what happened after? I missed this trade. I didn't took this trade. I missed this one. But the thing which I'm trying to say, this thing works everywhere. On any pair, it will work. but the thing is you have to look for the bodies of the candle. And now people say that liquidity, okay, so I think so you understood the structure, how to read the market structure. Okay, you have to just look for the bodies of the candle, not the wicks, and you have to look for that candle should close below that candle's body, so it will be a market structure shift for you. Okay, but the thing is, what about the liquidity? So for example, the 4H time frame is bullish. Okay, now we can see some old high over here, some old high. Okay, price goes above that old high, right? It goes above that old high. Now you tell me that what you will do over here. You will look for sales, right? You will look for sales. So what will happen is that price will go down below this low, and then what it will do, it will go up from this, like this. And why this happens like this? So for this is an old high. Okay, this is an old high. Why this happens? Because when your order flow is bullish, you should take trades from sell side liquidity, not from buy side liquidity. Okay, this was a buy side liquidity, but your order flow was bullish and you took a sell from here. It's not like that. Okay, it went down. This was your entry point, that it went below the, it taken the sell side liquidity. So whenever the order flow is bullish, only look for the price to take sell side liquidity, not the buy side liquidity, and try to do something different. Whenever you try to do something different in the markets, you will lose your money, because market goes as the order flow is going on higher time frame. Okay, if market is going up, that 4H time frame is making higher highs and higher lows, and it's going up, don't take the sell. Okay, if market is going up, don't take the sell from the buy side liquidity. You will take sell from the buy side liquidity when the market goes above, and then it starts to make another range, like 2 times confirmation. So for example, if market is going up like this, now you can see that it has taken a buy side liquidity from here, and now it has taken this low. Okay, don't trade at that moment. You have to trade in this middle over here when the markets are trending. If you want to do something in this thing, if you want to do something over here, you will lose money. Okay, but if you want to do something over here, you will make money. So I'm telling you how to avoid this. Okay, this consolidation. So now if market is going up and you know that there's a big weekly high or something, and markets are going up, and now you can see suddenly a market structure shift, don't blindly sell this. Okay, it can be a liquidity sweep also. You never know. Okay, we never know what's going to happen in the market. We're just predicting. This is the truth. Okay, so now it goes above over here. Wait for another confirmation, and trust it that it will give you one more time to enter, and then take the trade. Okay, don't go in this first one, go in the second one. Don't try to be at top or be at the bottom like this. Try to be in a trend. Okay, because when the order flow is going up, then only you will make money. When the price is leaving the consolidation, then only you will make money. Okay, if you're just trying to do something in consolidation, it will be a clear loss. All right, so the thing is, in this Forex, you can use 4H and 1H time frame. On SPX, you can use 1H and 5-minute time frame, and just look at the candle bodies. Build a narrative of higher time frame, that higher time frame is bearish, so I will look for only sells on this time frame, and all of that. Okay, you have to do that, and you have to just focus on your risk management. That's the important thing. If you are not able to manage a risk, no matter what strategy you are using, you will end up losing your money. Okay, so the thing is, try this, and I will post some trade ideas in my Discord also afterwards of this coming week, and just look for the trades and look for these type of setups in back testing. Go back in time and just look for these trades. So now I'm playing that trade which I took right over here live, and I'm not just playing that video. Just watch it and see that how I executed all of the trades. Okay, not over here, like where it was over here. Yeah, the Wednesday's trade. So watch it and see how I execute the trade. Okay, so I hope you understood, and if you have any questions, please comment below this video, so I will be able to know about all of your questions, and I will get to know that are you getting my points or not. Because if I don't get any comments, so it means like I'm not able to figure out that you guys are getting what I'm talking about. So I will try more to tell you about all of this. So leave a comment. If you don't understand it, leave a comment that I didn't understand. And if you understood it, just leave a good comment, and you can just share it with your friends. So I'm playing the video, so keep that in mind, and just watch that video where I'm executing live. Okay.
I'm trying to put you in the worst mood. P1 cleaner than your church shoes. Millie point 2 just to hurt you. All red lamb just to tease you. None of these toys on lease to. Made your whole year in a week too. Yeah, main bitch out of your league too. Side bitch out of your league too.